Good afternoon, everyone. Welcome to the 310 panel. This is the good one. This is the one on the biggest question there is in fintech, which is the collaboration, or the lack thereof, between fintech startups and the big banks, the not-so-big banks, let's say the financial services industry. This is at the heart of the whole proposition, and we have a wonderful panel coming at it from all different angles, and for the next 50 minutes, we're going to unpack what this process looks like now. My name is Edward Robinson. I'm a writer with Bloomberg News. I started covering fintech in London in about 2013, 2014, when the term first started to be used. And we've kind of watched, from a storytelling perspective, we've watched this story evolve from the early days of fintech was about the revolutionaries are going to storm the castle and they're going to take down these big banks that wrecked the world in 2008. And then it kind of mellowed out and it became, well, actually the banks have a lot of assets and market share and they've got that regulatory relationship, which I guess is kind of important, and maybe we should work with them. And I think the story eased into more of a, I don't know if it's collaborative, but it was more this frenemy type of relationship between the fintechs and the banks. And we saw a lot of accelerators start and a lot of processes start where the banks started to kind of shake off their isolation and really say, hey, we don't know everything. Maybe we should talk to some of these crazy entrepreneurs and their crazy ideas. Now we've moved into something else. And this next phase, which we're going to unpack this afternoon, is really fascinating because it's kind of a mix. There's still a lot of competition. There's still some revolutionaries who want to take down the castle. But there's also now finally case studies of collaborations that are working. And I'm just so pleased that we have a panel here of entrepreneurs, the banking industry, as well as what I'm calling kind of the Switzerland of fintech, and that's Mastercard. And Johan from Mastercard, I think he has this unique position because you move through all of the spheres in this space through your business. You have so many touch points in this space. And I thought perhaps we could begin with you, if you could just give us your perspective on where the story is now insofar as collaboration between startups, fintech, and the banking customers, the partners that you deal with. Help us understand the landscape to begin.
Absolutely. Thank you. And I've got an hour and a half, right, for this?
Yeah, that's right. This is phase one. We'll do part two tomorrow.
Very good. So I really like this topic of collaboration because very often when you talk about innovation and fintech, it's all about what you do. Building new e-commerce wallets, new authentication solutions, new whatever, clever technology. But I actually think that this is probably less interesting than the angle of who you work with. And if we take a look at us, Mastercard, as a business, this aspect of our business has changed dramatically in just the last 5 or maybe 10 years. If you go back as long as 10 years ago, we really worked with 2 types of entities, issuing banks and acquiring banks. If you're not one of those, we don't work with you. It's very, very nice and simple. Now, this is dramatically different. We now work with, of course, the likes of Google, Apple, Samsung to build their payment solutions or to support their payment solutions. We work with startups on a very large scale these days, in part perhaps as a recognition of the fact that us on our own, no matter how global or large we might be, we can't build everything. We can't anticipate every new product and service that might come up and that might be important. So maybe just to touch on the startup engagement piece specifically, because we are here today at a startup-focused event. We now run something that's called StartPath that we've been running for 2 or 3 years, I think, that brings in mature startups from around the globe, and we try to find different ways of providing support to them. So we introduce them internally. We introduce them to our customers. We provide expertise, and in some cases, investment, of course, as well. And out of this, we're getting some tremendous results. So just during last year, I know we ran over 30 individual projects together with these startups that came in through StartPath. I think there's several of our StartPath companies here today. I know Revolut were on the stage earlier.
Revolut went through your program?
Revolut were part of it, yes.
Excellent. Okay.
And I know we have the guys from PayKey are here as well. I've done some really interesting stuff with some of our customers. So we're finding this very, very valuable to us as a business.
I see. Tamaz, I don't know if you must all be familiar with Raisin, but if you're not, it brokers deposits. It's a really intriguing and groundbreaking model in the fintech space, which really kind of captures, in a very real sense, what the European Union's banking union was aimed toward, and all of a sudden now it's happening thanks to your platform. Just tell us a little bit about Raisin, and share with us, if you could, about the importance of your relationships with banks and how you've actually cultivated banks as customers.
Yeah, sure. So Raisin is a Europe-wide marketplace for savings. So actually we connect end users, consumers, both businesses and private individuals with banks. So we have currently 40 banks offering their products through us. So it's a completely integrated experience. So a customer opens an account and has access to a variety of banks across Europe. And we do it directly towards the customer. We do it also through third parties. Like, for example, N26 Savings is a partnership with us together. So it's a white label solution of us, which we offer to third parties as well. So it's at the end in a extreme solution. It's actually a bank offering its clients access through us as a white label partner to other banks. So it's what open banking is about, and open banking Europe-wide. I think we're one of the very few solutions which are available throughout Europe. Through our Raisin.com, we onboard customers from 29 countries currently. So yeah, that's the story. So the whole business model is built around partnerships. So it was very hard to get the first partner in a marketplace where you don't have to offer anything beyond an idea and a very initial funding, which is probably not enough for the first year. It is very hard to persuade the first partner to join it. But after that...
what was the response from lenders? When you went to talk to them and say, hey, I've got this crazy business model, check this out, what was the response?
So the most honest I had with a large bank in northern Italy. And they said, you know what, we love the idea, we would actually instantly do it. Come back to us once you have 1 billion euro in deposits. So... and yeah, so that was honest one. The other says, yeah, we're like really excited. Please update us when you're closer to the launch and show us your first 5 partners. And so it's quite natural. Now, when does it work and when does it not work? So I think because fintechs are about simplicity, it's of course very simple to say, like, let's outsource everything from sales and acquisition towards KYC and towards the product, everything to banks, and we just do like connecting through APIs, and it's all fun. The real world doesn't work like that. So it has to be, first thing is a clear value proposition to both parties. So I think the things that clearly do not work when it's just for innovation or just for the sake of the partnership. So it has to be a clear value add in terms of dollars and euros on both sides. So the banks which are working with us are saving money because their own solution will be more expensive for them. And our pricing scheme is the way that there is no fixed cost. It's just a variable pricing, and it's tap on, tap off. So it's a really no regrets. If they do business, they pay. If they don't do business, it's just an additional channel. The second thing which we found very interesting is it's actually clear-cut proposition, and then it's also the size, because the size has to match. So it never works out if a small player is partnering up with a very large player, because one side loses the focus or the other side is overwhelmed. So if everything works out. If nothing works out, then then of course it's no regret about that. But if it works out, then one of the sides is either overwhelmed or the other side is actually not performing well, so it's not relevant for them. So the sizes have to match up. We're right now at 5 billion or exceeded 5 billion, so our size increases, we'll get more relevant. That's why the number of partnerships and the scale increases. And the last thing, it's about technology. I think for many of the players, we've been also a bit of a technology playground. So just to see how APIs work, just to integrate. We're testing partner with Verimi, which is the single identity provider in Germany. We do a lot of these things. We give out also APIs for testing, just as is, without a business case behind it, so that the others have something out of it, even without a business case behind that.
Okay. Teppo, you are the head of new digital businesses at BBVA, the Spanish bank, which has been really at the forefront of embracing fintech and really getting after it when other banks didn't even know what it was. Share with us, if you could, just how you've changed your relationship in working with startups now that you've been doing it for several years. And then if you could kind of segue into what the advent of PSD2, the Payment Services Directive that's now come in January, how does that change what it is that you do? I mean, how does that change your relationship with startups? Because as a result of that law, banks in the EU are now going to have to share their customer data with qualified fintechs and other providers, and that's kind of a seismic event that's really changing the marketplace.
All right, that's a lot. I sit in the kind of the fintech side of the bank, so maybe I'm a little bit biased towards the fintechs. There's several different roles of what this relationship could be. One is the traditional, which kind of was before this wave of, oh, they're going to take our customers, which banks have always been using technology, and usually that comes from either smaller or bigger technology companies. So those relationships have existed for a long time. Now, that hasn't gone away. It is still needed. You need to do it maybe a little bit differently these days, because you want to be faster than in the past. The challenge with this kind of a vendor relationship is basically the risk appetite, the compliance, all of that, which is maybe sort of from a fintech's perspective, it looks like a very, very big activity inside the bank, a big and a slow one, and in the worst cases, then the bank looks at the fintech as, well, why don't you get it? And actually, one of the things we do in our group is the people we hire, we try to combine. So typically, the best profiles are people who have worked for both a startup as well as a big company. And so that's a little bit about the kind of our mindset. And now, then if you go from, if this is okay, I'm your supplier, then you turn that around. So for example, we are providing some banking as a service capabilities, which means that the fintech can actually build their business on top of ours. What's interesting there is that the fintech is actually customer, but from all the internal rules and from the regulator's perspective, they're still a vendor, and they will still go through the same vendor management hell that the industry is used to, and which sometimes is justified, sometimes maybe goes a little bit too far, but that's the kind of the balancing act. And now going then, if I try to go to PSD2, which sort of has happened and sort of hasn't, we're still in the first stages of screen scraping instead of APIs. We don't know if everybody's going to have the same, how well it's going to work. Now, for a bank, you can like for anything, any change, you can look at it two ways. You can look at it as, oh, this is a risk, this is a a big problem. Let's try to fight it. I think there was a lot of that going on, obviously, in the early days. Then there's the other, which is, oh, this now also opens up the opportunity for us to access other banks' data. And it's a massive problem, even a bigger problem in some countries, of actually acquiring customers because you don't have the data that the other guy has.
You mean I hadn't thought of that. So strategically, PSD2 creates an opportunity where Bank A, not only will it be sharing customer data with FinTech A or FinTech B that comes along, but in turn, it might garner a look at data from Bank B. Is that right, Wim?
Yeah. Sorry.
Go. This is absolutely correct. And you see that some of the more advanced banks are looking to either create a fintech challenging and accessing as a subsidiary, or adapting themselves to that. So this makes it interesting, and that is what's changing. But indeed, PSD2 is not ready and not yet that. And if you even say the word screen scraping, my mind thinks man-in-the-middle attack, if you like cybersecurity. Sorry, but I was interrupting you, Teppo.
No, but I mean, Ramin, you're FinLeap, you work very closely with startups in cultivating startups and developing them for this space. What are they saying right now? Are they looking out at this, let's call it post-PSD2, even though it's just being implemented now, but are they looking out with an eye toward, yes, I'm going to collaborate with a bank, or are they looking out and saying, I'm going to compete with that bank, I'm going to take their customers away from them?
Okay. So within FinLeap, it was always core philosophy to, let's say, have a cooperation, a revolution in one.
Yeah.
So there wasn't, we were never positioned like, I don't know, waving the flags and saying banks are dumb and banks are shit. Sometimes they behave not smart, but we still work a lot with them. So the main thing is, I think 3 years ago, everything was like unbundling the bank, right? So everyone was starting a small feature, small business line, but yeah, very much you can call them feature. Not every business was a proper business model itself. And then it changed a little bit. Then a lot of ventures rescued themselves in this banking corporation, I would say. So because there was...
They rescued themselves.
I mean, a lot of the companies were founded, they were not enough for a business model. So they went to a bank. Ah, okay. Bank sponsored them another hackathon, another workshop, another accelerator, another hackathon again. And so a lot of bad ideas also survived over the time. I think now banks are seeking for a larger, more integrated solution and not to launch yet another feature. I was just coming back from a CEO talk and he said, please don't pitch me another fintech because I can just not stand it anymore. There are 150 ideas. I need one where I can go. So also for them, I think it's very, what Teppo said, it's more a vendor relation. And a lot of banks use the word partnership, but in the end, it's actually bullshit. Because it's not eye-level contact, right? I mean, they say, okay, what's in for me? I pay you, okay, fine. And this pay-as-you-go model, it's Thomas explained it, they're very beneficiary to get quickly a deal done. But I see a lot of our ventures rather being a competitor to, let's say, an Accenture, SAP, or IBM, and less to really a bank. That's why I believe also our customers, and that's the biggest threat for banks, in the future won't be banks and insurances anymore. They are today. We work with over 700 banks across the group. But the latest investment, what happened was Zalando investing in one of our firms, because Zalando wants to understand how banking can verticalize their industry, and they have the buying power to actually verticalize it all. And why do we need a bank in there? And for financial services, yes, you need a bank for balance sheet purposes, but the asset managers who give you better rates and better assets. And so I believe when it comes to PSD2, yes, of course, it will be a big chance. Yeah. But I think bank needs to be watched out that it's not feature. It needs to be really integrated, holistic solutions across the value chain.
Okay.
Maybe just one comment on some of the Ramin's examples. The old rule of innovation is that is the incumbent going to get innovation faster than the startup is going to get distribution, and if you look at kind of the, let's say it's not a past wave, but most of the fintech innovation has been mostly about a better experience, and a lot of that is not that difficult to copy. I mean, once you start losing enough business and you notice, oh, I got to react, then it doesn't take that long for you to start having better experiences. So if when we're talking about the fintech versus the incumbent, the winner will mostly be the incumbent if it is just the better experience. If it is a completely different business model, like your Zalando example, then that's a different game. And then actually the incumbent is going to be in a much worse situation because there's somebody else who is now giving, for example, free something that used to be your revenue model. And that's a lot more difficult thing to compete against.
Yeah. And a lot of those companies like Zalando are way better than in UX than banks usually are. And they have by far lower customer acquisition costs. So if they bring it then in the end to financial service products for their customers, that is large opportunity for them. And the good thing is finance is just a meter industry and can serve all of them. That's why I'm really optimistic for all the fintechs and all the tech-enabled companies. And sometimes I wonder if the trend should have been called TechFin, because then maybe the banks would have been opening to work quicker with the companies as they used to.
Because that kind of clarifies the vendor relationship?
Yeah, because it's more the vendor relationship and not, I mean, who is really, of all these models out there, really threatening banks?
Yeah, okay.
I think to be honest, fintech is a blessing for the banks. Because think about 2008, huge crisis, banks were seen as risks to society, balance sheets were not in order, and this was a stuck industry in a sense. And the nice thing about my role is that I see 4,500 banks move over 32 countries. And then you see the different approaches. But the industry is finally moving. And yes, banks were always fintechs, but they had their structure, they were closely related to government, they had their branch structure. So indeed, one of the big problems that they have is, will they get their costs down quickly enough to actually move? And the question for the politicians is, will they accept, which they always say, that there will be losers in this game, and that some small banks who are not able to adapt or to specialize will have to disappear. And this is the big question, because in the corporation, it is not only the question about banks with fintechs. We know where to find them. And if you look at many of the fintech startups, they have brilliant ideas on parts of the value chain, and they need indeed distribution, they need trust, they need a brand to quickly move, and that helps a lot. And you see three different models. You see, I would say, the BBVA model, but you also see it with ING and Santander and different banks who are really completely reorganizing their banks and their decision structure, which is brilliant, in my view. That's the way to go. Then you see others who stay mostly unchanged, but who have a subsidiary that is completely free to be as digital as they want. The question, of course, with this model is, if the new digital bank is a success and the old is still old-fashioned, how will the ideas from the new bank be integrated in the old bank? Because one is going to hurt. And the third model, which I think lacks vision a little bit, that I see, is just looking around in your region or in your country and buying all fintechs that's before they come to full maturity, and just see if there's any interesting, and just putting them on the shelf. The problem with that is that there's no vision, and in my view, these will be the banks that will be losing. But if you look at the corporation, the problems are the different, the corporation is there, you will have the different regions dealing, but in different regions you have difference between supervisors and politicians in the way they look at fintech. If you look at Estonia, for instance, oh God, I want to live there from a fintech perspective. But if you look at other jurisdictions, they find more problems than solutions. And I think that many in the panel knows this, but next to the cooperation, there's a third party behind the curtain that is the supervisor, and they need to make it work, because the regulation is in place, and now it's the behavior.
I see. Well, Johan, I mean, swing over to payments now, and let's just look at the payment space, and it's dynamic, it's in flux. And it's kind of presented, it's seen as kind of a way in for not just fintechs and not just the banks, but even big tech, big players, the Amazons, the Apples, the Googles of the world. How does the relationship that we've been talking about right now, the relationship between fintechs and banks, how is this going to be shaken up by what you're saying, what you do in the payment space? And again, it gets us kind of back to PSD2, but...
Yeah, no, it's a great question. And I think it comes back to the points that have just been made about how the most important innovation perhaps isn't about user experience and functionality. That's what we look at first, and it's the first thing you see. But like you said, it's very easy to copy a great user experience, right? Big bank can turn around and do that. But the real innovation that's brought by some of these, or the real disruption that's brought by some of these startups, is really about cost structure, about management structure, and all these things, right? That's what's going to leave a lasting legacy. Now, for payments specifically, we're seeing this in a number of different areas. Of course, I mentioned earlier the entry of Google, Apple, Samsung into the payment space. This wasn't universally popular when they first came in, because they were seen as potentially a threat to the banks. They're taking over user experience, all these things, but they also drove a lot of innovation. Right? It's much thanks to them we're now seeing mobile NFC being a success across Europe. and we're seeing continuous growth on that.
And they leverage their data, their customer data, in ways that
they do
are
and
really
they don't, right?
state of the art,
different
right?
strategies between the different players there. And of course, new regulation around usage of data might to some degree stop that.
Right.
But I think that the data point is really important for us as a business. Our job is really to facilitate a smooth payment experience, no matter who is building that technology, who's providing. We're trying to build a neutral network that sits behind the scenes to facilitate the smooth payment infrastructure, payment experience. And one of the ways by which we can do that is facilitate management of data for our customers and the analysis of that data. And it's one of the ways by which we try to respond to all this innovation that's taking place at the moment. So we now run a substantial data analysis business next to our normal payment business, through which we're trying to help banks, retailers, and others to better understand their own business and how they can drive innovation.
So the fintech story has really reached a point where, I mean, the banks are they're very capable now of separating wheat from chaff. That all of the kind of the UI, the front end, been there, done that, that's kind of done. What you're looking for now are groundbreaking models. I mean, models like Raisin. You're looking for something that's, whoa, that's nobody really has thought of that. Is that right? Is that where we are at the stage now, that all of that UI stuff that's all easy and the banks can do that themselves now?
So someone has to disagree, so I would disagree. So I think the fundamental difference between us and banks, it still exists, and this is willingness and ability to deliver extreme quality at the lowest cost. So I myself am CEO of the company. I do not take business flights. I take the cheapest fare. I don't have an assistant. I don't have anything which a bank manager would have. Our average, so we are able and willing to run our business at a couple of dozen bips, maybe 30 on average. Comparable business model of banks are run at 100 bips. At a much higher cost, our NPS is 73. I don't know what BBVA NPS is. I would assume also in the high 10s, but not maybe 73. So the willingness to compromise on everything beyond customer quality and costs. This is something which differentiates us from banks. So I would see, and this is history. I mean, they're coming from huge towers, from huge costs, from something which they've not built it up from bottom up at the lowest cost possible. The CEO, of course, doesn't fly EasyJet and takes the middle seat. So in that sense, there is a fundamental difference, and we're coming from a very, very low cost and from a very good experience. So I think there is a competition, so not everything is fluffy and not everyone will marry each other. So there is a competition in the market, and the fundamental difference is we deliver customer experience at the lowest cost.
Maybe let me just ask that, can the banks innovate their way out of the cost structure trap that you just described?
I think yes, but this is really something like airline industry or energy industry in the 90s. So
is it possible?
It's a huge turnaround. It's like times 3, times 4 cost reduction. It's
one thing that you said, no, but it is also a question about timing. If you realize where banks coming, it's nice that you concentrate very much on the joys of flying EasyJet. But if you forget the executive salaries, the problem is banks are held. I've in the past had to close down branches. I was almost lynched by the local community. And the problem was that the local community was very angry at me, but literally nobody came to a branch. So their cost base, reducing their cost base because they're held by society, including the political environment, to keep open branches, keep open all sorts of inefficient structures. That is their big problem. And the question is that the society is changing, and when society is changing, you can cut those costs. But will the banks have enough time? And my personal idea is that if you haven't started before, you will be too late, because the time it takes to cut down your cost structure is longer than the time your business is changing. So there's a big dilemma.
Maybe to add 2 points to the UX. I mean, yes, on the front end, it might be nice and shiny, but I think exactly what Thomas said. There's a big German bank in Frankfurt, very big. They have 400 people in their digital app. Yes, they won the prize for now the best looking app at all. 400 is what, 3 times your business or 2 times your Raisin business? And they guys just were building the front end.
They're building just an online banking
like
app.
the online banking front, and they were building obviously a little bit more, but in a nutshell, it is, first of all, from the 400 people, 70% external, people, not hired, because they don't find the talent out there. Secondly, you can build the best front end if the process stops somewhere. I mean, if you build a front end which gives you a credit in 5 minutes, but the process afterwards takes 5 months or 5 days, then the front end doesn't matter. So coming then to the cost point, how be quick enough, I think, and this would be maybe a general advice for free, don't hire the same consultants, same IT providers, same guys you hired 20 years before. You need to be a little bit more radical. So select those fintechs, select those players, select new players, which really can change the business. I got asked very often in Germany, so what do you think? Should Deutsche Bank buy Commerzbank? I think this is the boringest question in the world. Should Deutsche Bank buy a tech company? Yes, they should. And look what Apple, Google, or Facebook did. Facebook, VR, big trend, they bought Oculus Rift. Picture, they bought Instagram. Messaging, they bought WhatsApp. They bought all this different stuff. And when it comes to frenemy, don't forget that Apple is using Samsung glasses in all their iPhones. So, and Samsung chips. So there is not bad or good, and this bank is not doing this. So concentrate on build stuff together. And I think this single sign-on solution, which is coming, we are talking 2018, and banks have an account since, I don't know, 200 years. Why they're not providing the first single sign-on ever? And that's for me totally not understandable. I think there needs to be way more radical change, otherwise they will lose.
You mentioned acquisitions. Should we anticipate seeing more acquisitions, banks buying more fintechs this year into the next? I mean, anybody just weigh in if you have an opinion on that.
I mean, I guess a lot of fintechs are not there yet to completely or to get overwhelmed then again by the banks, yeah. And I think it has to be depends a lot on the governance.
Well, let's put it this way. If you're a startup, you're a fintech startup, should you design yourself? Should you be built to be bought? Is that a wise course to take? Because you anticipate that the banks, especially those that have fallen behind, are going to get desperate, and they're going to really want to start buying the technology if they can't develop it themselves.
Depends if you want to make money or if you want to last, right? If you sell too quickly now, you get out of a rich man, like same with crypto, but you don't last maybe. So then you shouldn't do that. But I think what banks should do, they should really look deeper in the pockets of the process. I mean, we found a bank, we found an insurance, we found an asset manager. They're all fully licensed, and this is something which I call true BPO. So banks can actually outsource their complete IT, their complete user process, plus their regulatory environment. And this is a little bit the way we believe, at least, the industry will change.
Build to be bought sounds like the most dullest entrepreneur ever if you're built to be bought. So that would not be my advice for a startup. Yeah. But again, the basis is, so banks should certainly buy and cooperate and have all sorts of ways of cooperating with fintech, but based on their own vision. So indeed, I agree, don't get the same consultants in who are very good at PowerPoint, and you can anyway go to INSEAD and know next year's fashion among consultants. But be creative and get creative people in, maybe non-bankers, and let them advise. And again, this is not what I'm thinking here at stage. I'm seeing this happening, is that those banks who are successful develop a vision by being diverse in their talent, going to new ways, going to deeper into their business model, and they will be winners, in my view.
I'm sorry, go right ahead.
No, I was going to say, in addition to that as well, I think you shouldn't rush out and buy capabilities that you don't currently have. I don't think there's anything wrong with partnering to get the capabilities you don't have, and let your partners remain independent businesses. It's a temptation for big businesses like us to just simply make an acquisition straight away to get it in-house. But there's also the risk that when a large corporation buys a small entity, that you ruin them through that cultural legacy and things that we've already been discussing. So in many cases, it's smarter to leave them outside, form a partnership agreement, try to work with them, try to learn from them, and see where it goes.
Very good. Let's talk examples, case studies. I mean, you guys look at the fintech space all the time. You delve into it. You see a lot of examples of collaboration. What jumps out at you as a really great deal? Something that really kind of caught your eye, and whoa, that's a very nice example of a traditional financial services business and a fintech getting together and doing something new. And you've got loads of them, don't you?
Okay. Yeah, several ways to look at it. I think Raisin, of course, we have one good example here. If you, in our portfolio, we have things we have acquired and we have things that we have built internally. And these are completely new businesses. We're incorporating them separately. However, if you look, under the hood, you notice that actually they have, I think, on average, 13 other startups that are part of the solution. And so there's so many different ways to work together. And again, it helps a lot that the people talk the same language. We have these entrepreneurs in residence who are all ex-entrepreneurs, and it's a different conversation than when you talk to somebody who has worked for the bank for 30 years. I still want to go back to the previous question. I think there will be these panic type of acquisitions.
You do?
I think so. It has happened in all other industries as well, when people get to the point of, I got to do something, and most of them will fail. Well, most acquisitions fail anyway. I think if you look at the history of mankind, but you may still have to do it. You may still have to try, and it all comes down to the cultural questions of So you're, especially if you do these kind of acqui-hires that okay, I don't really care too much about their business. I just want the people who know how to do this. For example, from a technology perspective, then you really need to make room for those people so that they can have an impact, or they'll go and do the next thing.
Okay. Any other examples?
Solve something. Again, going back, and I know so much certainly about Estonia because it was the Estonian presidency. What is, for me, a huge letdown is digital onboarding, that you go through a full process and that the regulator demands to the bank that you print out at the end the form, the contract, sign it with a pen, and then go to a branch with your passport to be identified. And in Estonia, they solved it through a startup doing very simple digital onboarding. I think they're called Virif. And the way they filmed it, they filmed the onboarding process, the security system. It was so well thought out, and it was a 20-year-old guy coming, I think, from Facebook, who started it, was cooperating with the banks, and the government helped them by connecting to the public register. And this was not only a startup that really worked, it was a huge dissatisfier with all customers that was solved in this way. The government played a constructive role. And what I liked very much is that, as they claimed, the AML process, the anti-money laundering process, and the Know Your Customer was done better, because the way we do it now, analog, as is prescribed by most governments, there is one person checking one time, one passport, and you can be wrong. By doing it digitally, they can look at it 1,000 times if they think that it's wrong. So that jumped out to me as, God, this is fantastic, want more of that.
I see. Well, one thing that struck me in watching the panel this morning on the neobanks was this trend. I mean, we see so many fintechs now going for licenses, banking licenses in the UK, France, Lithuania, Germany, across the EU. And it kind of got me thinking again about where we are in this cycle and where the collaborative story is. And it just kind of struck me that they really, at least those neobanks, weren't really out to collaborate. They seemed like they very much wanted to compete. And I mean, is that, when we kind of, our takeaway from this session right now, is it really that the word collaboration really isn't that useful anymore when it comes to this story, that collaboration between fintech and banks in this space is really more of an illusion, and it really is about either a vendor relationship or it's about competition, full stop?
So we thought a lot about this, because questions also whether we open up our product and how far we open up our product at the end to the third party. So I mean, just to mention, BBVA is a great company because it opens up for its clients new products. So we are partnering with BBVA Connect, so you can become with one click actually client of Raisin through BBVA login. So that's a great thing. We thought about it and we thought, like, what is this whole PSD2 thing? So what it is saying, and regulators are always right, it's saying the customer is the owner of himself. It's not the bank, it's not the payment provider.
That's what the legislation says. You own your own data.
So the customer is the owner. So at the end, the customer will have access, or should have access, anywhere he is. He's in the branch, he is at BBVA login, he is at Raisin website, he is at 1026. He should have the access to the same product, same experience, executed very well, and in the shortest time. So that is our vision. At the end, I think the whole learning out of it is give the customer the product and make it seamless and feasible anywhere he is, offline, online, digital, non-digital, in any of the countries. So I think, and that's the good news of the collaboration, you cannot do it yourself. So you cannot construct all the channels and all the access points and all the products behind. So we are all part of this collaborative environment. Some of them more open, some of them a bit behind, but the future is clear. It's all collaboration.
It's collaboration with economically reasoning, right?
Yes.
I mean, this is what I question a little bit about all these accelerators and hackathon.
What do you question about the accelerators?
Because it's not with the economical rationale for the banks. The banks just have have enough money to
So you don't think they're that useful?
They're not at all. I mean, for who are they useful? For the very good startups, they usually don't go there. A very rare startup, because it's adverse selection. The very good startups get funding somewhere else. The very good startups get customers somewhere else. You didn't need an accelerator to get contacts to banks. Yeah? Tamas knew them before, and like a lot of others as well. And who is so applying then to this accelerator and is creating, and it's very often to say, oh, we do something. Yeah, and then another PowerPoint, and we do something again, and 25K. So I think it's this time is a little bit hopefully over, and really they work on concrete business models, because it needs to be economically make sense. On the other side, you cannot write a business plan for every innovation at the same time and not wait till the business plan is processed through your organization. So that's why we see a lot of our collaborations, if you want to use that word, just work when you are sitting in front of the CEO. And so that's why I believe CEO and innovation needs to be 100% linked. Otherwise, you don't get it through the organization.
Wait, so you're saying the CEO is critical?
It's like this. This is the only one who can really, really much decide it. And then there's, because it's, I mean, in the large organization like this, because he's the only one who can take the risk without having a business plan.
Right. Anyone else on this idea? Just that maybe it's time to retire this word and just, it's really, I guess with the advent of PSD2 and with where we are in the story, FinTech is maturing. Have we really reached a point where it's just, show me the money?
Okay, I think I'm a little bit here on the shooting line, so I'll react to that. The way we look at this is we focus on the individual businesses, right. And that's the primary, is the success of that business, and I totally agree. You know, we've actually had a couple of cases where we killed the project because we didn't yet have a CEO, and we learned in the previous ones that if the CEO comes later, he or she is going to change everything anyway, so you can throw the business plan away. The model of whether it is venture capital, whether it is these acquisitions, etc. In all of them, the main point for us is how do we help them to be successful? Now, one of the ways you help them to be successful is you make them independent, and you have the same rules as any startup would have. You have the same incentive models, etc., etc. Then what honestly we have not solved yet is the next step is, okay, now what if you're successful? How do you now integrate with the rest of the bank? Because we've kept you outside in order for you to be successable in the first place.
So that's kind of the problem. It has to be solved.
That's where it ends up. And now I would still claim that there's a massive benefit that is very difficult to quantify. I joined the company 3 years ago, and the people just talk a different language than 3 years ago.
So things are moving
people
fast.
Did not use the words that you use in the digital world or in the startups or in other industries. And it's difficult to quantify that, but there just has to be a value there because we are becoming a digital business anyway.
So maybe just a quick comment on your statement or question. Is collaboration dead, or is it done with? Do we not need it anymore? So the risk of sticking my chin out a little bit, I think collaboration is more important than ever. I think it remains absolutely key. The whole industry is going through an enormous transition. Without collaboration, the small businesses, the small startups, won't be able to get the scale they need. But without innovative, fast-moving, small, low-cost-based businesses, us big ones won't be able to succeed either. We probably won't be able to stay relevant long-term. So collaboration is critical. I think the point you're making is that we are seeing increasing competition as some of the startups are growing up and getting more confident.
That's right, yeah.
But in my interpretation at least, what that results in is a degree of unbundling of the value chain, where new entities and new parts of the business grow up as independent entities, and large banks and large businesses will perhaps have to focus on just what they're really good at rather than doing everything from the, I don't know, from the mine to the car manufacturing, right? You need to focus on the bit that you're good at.
Yeah. Collaboration and challenging each other is essential. And indeed, I completely agree. You will see unbundling. Banks will have to rethink what their brand is digitally, because customers want to belong to a brand, and what's not branded and can be done by smarter solutions. So to be everything for everybody is something bigger banks will need to stop doing. And then for the smaller banks, if they want to survive, I think the availability of technology, the availability, the ease of working together is their reason for survival. If they adapt and if they find the niche to work, then it might be a very fruitful cooperation. But you'll see a lot of that. This industry is highly challenged, and indeed, I agree, collaboration is more key than ever.
But what about the rebundling? I mean, we've seen the unbundling coming, but now, especially in the context of PSD2, we increasingly see a lot of attention paid to the new aggregators. So is this new breed of fintech coming on board, the aggregators, how does that work in the context of collaboration with the pre-existing aggregators, which have been the big banks forever, right? Kind of unpack that a little, if you could.
I mean, especially when you talk to companies not coming from the financial scene or not being a bank and insurance, then it's more and more important to have an integrated portfolio you offer to them. However, I think this rebundling can be by using different suppliers. So what we see now, we offer to non-banks, let's put it that way, a solution where basically a bank is our supplier, because we don't want to take the credit on our books. I mean, I know it sounds super cheesy, but if Uber doesn't have cars, banks don't need a balance sheet, right? So we don't want to take it on the balance sheet, but we have...
I wonder what the supervisors will say about that.
Yeah, what will the banking supervisors say about that? The balance sheetless bank.
Let's say financial services without the balance sheet, okay?
Okay. But isn't aggregation, wouldn't that be like the mother of all collaboration in this process? I mean, to bring all of the parties together into one app?
Is it really one app? I think it's the point of use or the point of interest where it is, right?
Okay.
And I think when I shop at Amazon, I want to get the financing which I ever buy on Amazon, or the same with a car. So I think that different point of interest. And let's face it, banks don't have a business model for itself. They just enable other industries. Yeah. So that which we should not forget. And sometimes we're too selfish, everybody needs a bank. No, the people need financial services, and that we should serve.
This statement shows the importance of brands for the future of banks.
Brands, yeah.
Because if you want to aggregate, if you want to rebundle, your brand is everything, because that is exactly what you say. I don't care who does it, I want to do my business with Amazon. The same goes for the future bank, rebundled bank. You want to do your business with BBVA, you don't care what's under the hood.
So that's the ACE card that the banks have right now.
And they need to work on it hard, because and you see that the use of branding, many of the big tech platforms are much better at that. So again, lots of challenges and reason to wake up and stay awake forever.
So in the remaining 30 seconds that we have, so it's kind of as a follow-on for your question of, so what is a fintech with a banking license? I mean,
Yeah.
because that's what is happening, right? Fintechs,
Yeah, that's
either
right.
they start, in your case, you already start with the license, or then you get it as in the next round. Now, the next step, though, is we've been very much kind of thinking that all things banking related stay within the banking area, and I think there's so much that actually happens outside, and which has happened in many other regions already. So you know, that'll be a bigger wave. Yeah.
Okay, very good. Well, I think I want to thank each of you for coming on and sharing with us this afternoon where we are in this this story. And again, just to reiterate, I do think the question of collaboration is at the heart of this thing, and is just going to intensify. But I also think some takeaway from this is that, you know, enough with the big kind of abstract ideas. Let's get down to actual business and see performance, right? Good. Thank you so much.